right, with that, we are going to kick off today's webinar. Hello and welcome. I am Nicole Owens. I'm Director of Marketing Communications for MassMEDIC. If you're not familiar with our organization, we are a membership-based trade association that works to bolster the med device and life sciences industry in Massachusetts through education and connection, advocacy, and awareness. Today, we have our friends with us from the Massachusetts Life Sciences Center, and they're going to be talking about their great tax incentive program. Before I turn it over to our moderator for today, I do have a couple housekeeping notes. So I just want to let you know we are going to share these slides, and this webinar will be recorded. So we'll have that as resources after the webinar. And you'll also have time to ask Q&A. So please, we'd like this to be an interactive session. Anytime you have questions, please put them in the Q&A function at the bottom of the screen, and we'll do our best to get to them in the time allotted, or the folks at Mass Life Sciences will make sure to follow up with you after. All right, without further ado, I am pleased to turn it over to Jean Leclerc. She is the Chief Business Officer for the Mass Life Sciences. Jean.
Thanks so much, Nicole. Thank you all for joining us this afternoon. Really excited to be part of this, and it's always a pleasure to engage with the MassMEDIC community. So the Mass Life Sciences Center, for those of you who may not be familiar, is a quasi-public agency. We are essentially the investment arm of the Massachusetts state government for all things life sciences. So we've invested over $1.5 billion over the last 16 years in the life sciences ecosystem here in Massachusetts. We feel to great effect, and we are very excited coming off of the heels and the momentum of the recent authorization of the Mass Leads Act, which authorizes another $1 billion of investment over the next 10 years into the life sciences here in Massachusetts. And that absolutely includes and focuses on med tech and med device as well. So it's a really, really great time to be in our industry here in Massachusetts. And we're really proud to serve that community, whether it's companies, research, businesses, collaborations, internships, and everything in between. Really anything that serves this ecosystem, we think of ourselves as stewards and in service of. So we run a range of different programs, a dozen or so throughout the year, and it's another really exciting time because we're also looking at new programming that we might think about launching in the coming year. So all ideas are welcome. Please don't hesitate to reach out and engage with us in the Q&A session. Yes, in this session, but also after today. If you have any questions or ideas, or if you just like to share a story or pain points from your company's experience, we really thrive on all of that information and engagement to make our programming as excellent and impactful as it can possibly be. So thank you for being here today. We are focusing especially on a really fun program, the tax incentive program that's been running almost since our inception. One of our truly headline programs that specifically focuses on incentivizing job creation here in Massachusetts. And for those of you that may have been familiar with it in previous years, there's a couple of updates that you may want to listen for as well. So with that, I will hand it over to our program specialist for today, Peter Breiling, our CFO here at Mass Life Sciences Center. Take it away, Peter.
Thank you, Jean. Good afternoon, everyone. Thank you for your interest in the Mass Life Science Center's tax incentive program. And special thank you to Nicole and MassMEDIC for hosting us today. So first, I'd like to introduce the tax incentive program team. I'm on the far left there. Keira Murphy, who is our controller, is actually in charge of this program. She was not able to be with us today, but she is the point person for this program. And she is supported by Nancy Gorel, who is our grants manager, and Rich Bourgeois, who is a senior staff accountant. So the agenda, first we will talk about the MLSC strategic objectives, then the definition of life sciences, and then I will get into the tax incentive program in more detail with an overview, the eligibility requirements, your options in terms of tax incentives, how we define a full-time equivalent, an example of an award, the annual reporting requirements, our compliance guidelines, the timeline, and then the actual application process. So Jean touched on this earlier. The Mass Life Sciences Center is an economic development and investment agency. We support the growth and development of life sciences here in Massachusetts. We want to be the hub of the life sciences ecosystem. We encourage and support innovation by investing in science and businesses, and that's actually what this tax program is all about, investing in companies to help them grow. Strengthen and protect Massachusetts' global leadership in life sciences, and then accelerate commercialization of treatments, therapies, and cures. So the major objectives of this program, we want to promote economic development in the life sciences ecosystem, support Commonwealth's world-class academic medical centers, research institutions, universities, and industry leaders, promote highly skilled, educated workforce, create an industry-friendly environment, and support the development of treatments, therapies, and cures. And I apologize, some of this is a little redundant, but we just want to make the point. So all of you, especially those who are new to us, understand what the MLSC is all about. So some of our strategic priorities: support early stage startups. That has been very important for us lately. It's growing in importance. Geographic expansion across the Commonwealth. This is another area that we've been focusing on a lot more lately. And as I will tell you about later, we are offering premium tax incentive awards for companies outside of sort of the Boston, Cambridge area. But I'll get into more detail on that coming up later. Diverse and inclusive talent, advancement of novel modalities, growth in manufacturing capabilities. And again, we are really encouraging companies to build and expand manufacturing facilities here. And we are offering a premium tax incentive for companies hiring manufacturing jobs as well. I'll talk about that more coming up. And finally, support the digital health sector and the data analytics positions. So life sciences definition, I will not read through all this. The items that are bolded are new items this year that we have added to our list. So again, I will not read through all these in detail. As Nicole and Jean mentioned, we will be sending out the deck afterwards for your reference. So the tax incentive program overview. We administer a program with DOR, the Massachusetts Department of Revenue, whereby we provide a financial benefit in the forms of tax credits to life sciences companies that increase and maintain their headcount for 3 years in Massachusetts. So the way it works, a company needs to commit to hire either 5 or 10 people, new jobs, and I will get into that a little bit more a few slides later, and keep them for a minimum of 3 years. And this is a change this year. In the past, companies have been required to keep these jobs for 5 years, but based on feedback that appeared to be a bit challenging for a lot of companies. So we have reduced that to 3 years. The tax incentive amount is determined by the number of net new jobs committed. So the way that works is if you have 20 jobs at your company or 20 positions, and you commit to 10, you need to be at 30. We don't care about the ups and downs, the hirings and the terminations or people leaving. We just look at the whole number at the end of the day. And then finally, there's a clawback feature for non-compliance. So if you are in this program and you cannot maintain these additional heads for the full 3 years, you need to give back some of the credit on a pro rata basis. So 2024 eligibility requirements for the program. Applicants must be a life sciences company. You must be registered to do business and be in good standing in the Commonwealth. And we require certifications from the Department of Revenue, the Secretary of State, and the Department of Unemployment Assistance. That's all part of your application. You must be able to file a Massachusetts tax return for the calendar year that ends December 31st, 2024, or a fiscal year subsequent to that. And you must have at least 10 permanent FTEs in the Commonwealth as of December 31st, 2024. So eligibility requirements continued. Here are some new items with the program this year. If you look over to the left side, instead of a minimum of having a minimum of 10 net new hires, which we've had basically since inception, we have changed that now to make this program available to smaller companies. So you can hire a minimum of 5 net new hires if you meet any of the 3 criteria that are on the left there. If the company has less than 50 FTEs, if you are located in a gateway municipality, or if your company is located in Barnstable, Berkshire, Bristol, Dukes, Franklin, Hampton, Hampshire, Nantucket, Plymouth, or Worcester County. For all other companies, they need to commit to hire a minimum of 10. So again, some more changes to the program this year. At the far left, the premium per award. Historically, we have given out roughly $16,000 of tax incentives for each new job created. This year, we are planning to give out premium awards for companies that hire in those 10 counties I mentioned on the far left. In the top middle, as I mentioned, we've reduced the compliance period from 5 years to 3 years. If you go down in the middle there, historically, we have had a $30 million cap as the budget for this program. More years than not, it is oversubscribed. So with new legislation that has been increased to 40 million, I cannot confirm at this point that we can actually award up to 40 million, but I believe depending on the applications that come in, we have more room to award more, provide awards to more companies this year. The minimum job creation reduced from 10 jobs to 5 for certain types of applicants. I touched on that earlier. Top right there, we are also planning to offer a premium award per net new job for companies with less than 50 employees. When I say premium award, we're talking about, say, $5,000 on top of that $16,000 for each new job created. And then finally, in the bottom right, we are also planning to offer a premium award for net new jobs related to biomanufacturing. So companies, even if you submit, say 20 new positions and 10 of them are biomanufacturing related, we would give you some type of premium award for those positions.
I'll clarify for the purposes of this audience, that also includes manufacturing in general, not just biomanufacturing. Sometimes at the state level, we use that as shorthand, but just so that you know, we include advanced manufacturing, robotics, anything that touches on that med device or tools for life sciences as well. Sorry, Peter, just supplement.
Nope. Thank you, Jane. Appreciate it. So tax incentives to choose from. We offer 9 different incentives. I'm not going to read through them all. You can see them here. 4 of the 9 are refundable, 90% refundable. And I would like to note at the very bottom, we cannot offer tax advice. So as you look through these, please consult with either your tax department or your tax providers if you use an external firm to see which option works best for you. People not constantly, but numerous times they've called us and said, I'm not sure whether to take number 2 or number 3. What do you think? And we don't know your company. We don't know your situation. So please don't call us asking which of these you should choose. That's your decision.
And to supplement one more, I've listened and given a couple of these, you can stack them.
Yes.
Also.
Yep.
Is the one piece, it's not tax advice, a guideline, you may stack them.
So who to include? How do we define an FTE, a full-time equivalent? It's somebody who works at least 35 hours per week. Third-party contractors, interns, or employees paid by employment agencies are not eligible to be counted as an FTE for this program. You can include permanent FTEs of other wholly owned subsidiaries if they are located in the Commonwealth of Massachusetts. And if you have a parent company and that company is a life sciences company, and we define that as having 75% or more of their total global revenue as coming from the life sciences sector, you can include FTEs of that company if those positions are in Massachusetts. On-site requirements. Now, this one has been a bit of a challenge, to be honest. So all employees who are residents count as an FTE. So if you have an employee who works for the company in the Commonwealth, but they live in Rhode Island or New Hampshire, that's okay. They count even if they don't come into the, well, I'm sorry, let me back up. If they live in the Commonwealth and they don't come into the office at all, they still count as a full-time employee. If you have employees who live outside of the Commonwealth in Rhode Island or New Hampshire, let's say, they need to come to the facility in Massachusetts at least 50% of the time. So and we, it's an honor system. We trust you when you report your head count, that you track this and are being honest with us about these folks who live out of state, that they come into the office at least 50% of the time. But again, just to be clear, if you have employees who live in Massachusetts and they're 100% remote, that's okay. They count as a full-time equivalent. Okay, here's an example of an award. So if your base head count at the end of 2024 is 90 FTEs and you commit to hiring 10, your new target is 100. So that's your target for the end of 2025. So you will need to maintain 100 FTEs for all 3 years, and we will measure that on the end of 2025, the end of 2026, and the end of 2027. So if we were to give you $16,000 per head, 10 new FTEs times 16,000 is 160,000 worth of tax incentives. So you would put that on your next tax return, or your 2024 tax return, $160,000 credit. But as I said earlier, you earn 1/3 of that over the 3-year compliance period. So the way it works, you take the full credit up front in year one, the 160,000, but then after, say, 2 years, you drop from 100 heads down to 92 heads, then you need to pay back 1/3 of that 160,000 to the state. And you will work with the Department of Revenue on that. So that's what we call the clawback provision. Annual reporting requirements, 3-year reporting requirement. Reports are due to us. Nancy Gorel on my team is the person who manages this, within 30 days of the end of the calendar year. And she will send emails out to folks reminding them that they owe her this information. We will provide a link to an online headcount reporting form each year. You need to show us the number of permanent FTEs, the average salary of new hires, and any acquisitions, divestitures that occurred during the calendar year. And this last bullet is important because we do see a fair amount of companies, who are acquired or who acquire another company, and then we need to go back and restate their baseline. So we would need to work with you on that if and when there's an acquisition or a divestiture. Compliance thresholds. So we are somewhat lenient with the compliance. So going back to the prior example, if you commit to hiring 10 net new positions and you hire at least 7 or 70%, we will let you remain in the program. That's the minimum threshold, basically. If you only hire 4, 5, or 6 of those 10 positions, so you're in that 40 to 69% range, we will conduct an investigation with you, which basically means we will have a call with you and ask you why you missed your target and what your plans are going forward. And then we will make a decision whether to give you a 1-year grace period or terminate you from the program. And then the bottom line here, if you are at less than 40% compliance, then we will decertify you. And you have to give money back to the DOR, any money that you have not earned. Lots of resources available for you. You can go to our website, www.masslifesciences.com. If you look under funding programs, tax incentive, you'll see the solicitation, a sample application, sample agreement, FAQs, some Department of Revenue information, our reporting policies, and then some more information on acquisition and divestitures. So the timeline, we opened this year's application period on December 16th. It closes February 19th, so just under a month from now. During the month of March, we will evaluate the applications and work with the Department of Revenue to validate eligibility. Early April, we will come up with our potential list of awardees. On April 16th, we will present these awardees to our investment committee for their approval. April 30th, we present them to our board of directors for final approval. And then immediately after that, on May 1st, we will notify everybody, whether successful or unsuccessful, whether they have been approved or not. So you still have just under a month to get an application in. So we're right in the middle of the application period. So if you're thinking about applying, please do so sooner versus later. So you must apply on our website. Again, there's the link. We're using a new application platform this year. So you need to go in, create an account, and you can add collaborators, meaning you can have other people work on it, on your application simultaneously. So I will go through these fairly quickly, but these are some tips we put in. The platform we are using for applications is called Submittable. So when you click on it and log in, not log in, but when you click on it to get started on our website, you can go down to the bottom to create your account. Top right, it will ask you if you want to add collaborators so that you can add somebody else to work on it with you. And then identifying the number of FTEs, and we say W2 FTEs, that you are committing to hire. So, my example earlier, a company that has 90 FTEs and they say we plan to grow by 10 and they get an award for 160,000. That's what you would put in this box, the 10 heads. But please be careful here. Every year we see, 10, 15, 20% of companies get too aggressive here. They say times are good right now. We can hire 50 heads, and they wind up hiring 30. And then we have to put them, put them on that 1 year, give them that 1 year grace period, or sometimes even decertify them. So just please think through this before you just put a number in there. And also, I touched on this earlier, the certificates of good standing. So we need those, 3 of those, one from the Secretary of State, one from the, if you keep clicking, Gene, I think I'm sorry, my bad. There's 3 of them that we need. I believe we have all 3 of them in here. Once you get into the application, you can go in and submit an application for these so that hopefully you have your certificates by the time you submit your final application on February 19th. And this tip number 5, when you get to this page in the application, 2024 amount requested, we suggest that you use the 16,000. That's been our average. So if you go back and you plan on hiring 10 net new, creating 10 net new positions, you would put 160,000 in here for the amount requested. It's just the dollar amount. So use 16,000 times the number of net new positions you plan to create. This is important. Again, and Allison, feel free to jump in and help me out with this one. We are subject to, as a public agency, we are subject to FOIAs and public records requests. So if you want information in your application to be confidential, please click yes here. So again, the key takeaways, the deadline is approaching, but you still have just about a month, February 19th. You need to apply on our website. Your applications must include certificates of good standing from the Department of Revenue, the Secretary of State, and the Department of Unemployment Assistance. And if you have any questions, please send them to tax program at masslifesciences.com. We monitor that website or that email box daily, so we will respond back to you quickly. So at this point, I will see if there are any questions that I can answer.
Just to get us started, there's a couple that I'll just read off from the session, and then as Nicole pointed out at the start, please feel free to just drop them into the Q&A function at the bottom of your screen. So one question, someone asks if you can carry over an award to a following year if you feel that you can't. Easy answer. I see a head shaking.
No, you cannot do that. You need to use it in the first year when you file your tax returns after we give you the award.
Makes sense. And then a little bit more about the compliance process is clawback super common? Is it like, do we get the money back to spend it again? What's the deal with the clawback? Are we incentivized to claw back?
No, so good question. Let me tell you about this in more detail. So the way it works, we the MLSC, we don't get this money. We don't have it. We have a lot of money for other programs that the Commonwealth gives us, and we can award grants and whatnot. But for this program, we just manage it or administer it. So the way it works is a company gets an award. Say I'll go back to my example, 160,000. They put that on their tax return, submit their taxes. The Department of Revenue sees that and says, okay, fine, they've earned $160,000 and the Mass Life Science Center certifies this. So it's all good. If after year one, let's say you're only compliant for year one, you would owe back 2/3 of that, which is 106,000, whatever that math is. It's on the company. The onus is on the company to repay that when they file their taxes next. So what happens is when the company falls out of compliance, let's say we need to decertify them, we send a termination agreement to them that they sign, and then we send it into the Department of Revenue, and it goes in the file for that company. So then the DOR does audits. So they'll go check, and if that company did not submit or send back in the 106,000, whatever that 2/3 is that they owe, then the DOR gets more involved and will contact them and say, you owe us 106,000. You didn't send it with your tax return this year. We need to talk about this. So again, we manage the program. We award companies based on their applications, but companies do not get any of this money back. DOR comes after you to claw it back, basically.
I'll supplement a little bit on the business development side for Mass Life Sciences Center. We want to see you use this money to actually create jobs and keep it. We're really very much incentivized to do that. I'll say we have a couple of programs, one of which is called Pathmaker, to help you supplement and find the workforce you need. So if you're struggling throughout the year, we want to know about it. We don't want you to wait till the end. This kind of transitions into another question I see coming in that asks, does it matter which month the hire takes place, or is it just as long as it's in 2025? It's just as long as it's in 2025. That cutoff really is December 31st, 2025. So if you said you were going to hire 10 people and you've hired 0 all year, and December 30th you hire 10, no problem. However, we kind of check in throughout the year because we don't want to be surprised by folks who aren't going to make it at the end. We want to be your partner in this. We want to support you in any way we can. We want to connect you with training providers, community colleges, interns that might be looking for jobs. Anything we can do to help you reach that goal is part of our goal as well. We do not want to see companies fall out of compliance, and we're not just here to sort of come in when you're non-compliant. We want to support you all through the way. So if you get into this program and you get some check-ins from us along the way, just know that that's not us looking over your shoulder to see if you're in compliance. We're doing that to see if we can be helpful. So don't be a stranger. Follow up from that same question. So you owe so Peter, clarification on the math. So you owe 2/3 of what you were awarded if you're not in compliance.
Well, yes. So let me use easier numbers.
If you were, I know.
So let's say, let me do that again. So let's say you received $150,000. Use a nice round number for 3 years. The math doesn't quite work out there, but say $15,000 for 10 net new jobs, $150,000. After the first year, so December 31st, 2025, you say, I committed to hiring 10, I hired 12. My total headcount is up by 12. Check. You're in compliance that first year. You earned, in effect, you get to keep 1/3 of that 150,000. So you earned 150,000, even though you already took the full 150,000 with your tax return. That's where this gets a little confusing. So, okay, you earn that first third. Then the second year, something happens, the FDA doesn't approve a drug, or financing doesn't come through, and you have to reduce your head count and you fall out of compliance. Then we would need to decertify you. And since you only were in compliance for one of the 3 years, you would owe 2 out of the 3 years, or 2/3. So 2/3 of the $150,000 award would be 100,000. And again, you're not going to get a nasty letter from us or the DOR saying, within 30 days, you need to pay us this amount of money, or else it's more on you. We send a letter to DOR saying we decertified, whatever the company is, and then they put it in the file and they do audits of the companies. And if they see that we decertified you and you didn't pay back what you owed, then they will contact you.
Two small supplements to that to preempt some potential questions that I've heard before. Your example is perfect, Peter, of saying 12 when you said you're going to hire 10. You don't get extra credit for those additional 2. If you put 10 in your application and you hired 100, you still are only getting tax credits for the 10. So there is a fine and nuanced line that you should err on the conservative side of, because whatever number you put in that application is the one that you'll be held to for compliance reasons. So you want to make sure you hit it without leaving too much money on the table. So if you say you're going to hire 10 and you hire 12, or you hire 100, you're still only getting the credit for 10. The other thing I'll point out is that being able to retain 1/3 of your award being in compliance for 1 year is a big change for this year, because previously that would have been 1/5. The compliance period used to be 5 years. So if you had to be in compliance for all 5 years to retain that. And if you're only in compliance for one of the 5, that was a 4/5 clawback that you were returning, whereas now that's 2/3. So just to emphasize that a little bit, that we're happy about too. We think this makes much more sense in the current environment and the current climate as well. Another follow-up on that, that's an easy one. Does the 3 years start at the hire date, or does it start January 1st, 2025?
January 1st, no, it starts December 31st, 2025. So we will award you, let's say you're successful, we award you on May 1st, and we'll say, okay, company XYZ, here's your award for whatever, 16,000 times 10 new positions is 160,000. You need to show us that you have hired these 10 positions by the end of this calendar year, 2025, the first year that you're awarded.
So it ends December 31st. So point being, if you hire someone on December 31st, 2024, you cannot count them. If you hire someone on January 1st, 2025, you absolutely can.
Yes. So
Just
the base, good point. The base where we start is 12/31/2024. So that would be your 90 heads, going back to the example. And then if you commit to 10, we will just circle 100 as of 12/31/2024 is where you need to be.
Yes.
You need to hire 10 during calendar year 2025. And like Jean said, we don't care if you hire them all December 31st, 2025, because we only look at this in terms of a snapshot.
Or technically, if you already hired them January 1st or 2nd.
Then you have to keep them all year. Yep.
You got to keep them all year, but you can count people that you have already hired in the beginning of this calendar year before even doing this application as well. You have to retain them. Follow up on the second year. Oh, these are fun. By the way, if we start getting into nitty-gritty specific, like case-specific questions, we are happy to follow up with anyone after this if you don't feel like we're answering this to the full extent of the detail you need. On the second year, does the FTE need to be a complete year? What if the headcount is reduced during the year? We might have just answered that question.
I think we did.
Yeah, all that matters is where you are on December 31st for compliance purposes, headcount wise.
And let me add something, Jean.
Yeah,
so
please.
What we had done before.
Oh, I see. And that person actually did write back and say, yes, I see. Headcount is counted at the year end.
Yeah,
Okay,
what we did before, we checked in with the company's awardees every quarter. And that was crazy. Kind of goes to this point, because people were up one quarter, down the next quarter, up one quarter. So we said, we're chasing our tail a bit here. So what we are doing now is September 30th, the end of the third calendar quarter, Nancy will send an email out to everybody saying, please just send me an email, or she might use that automated form saying, where are you with your headcount? So she can sort of get a heads up. And then officially, we look for your snapshot or your head count as of 12/31 to be 25. So again, all the ups and downs, we really don't care about that. We just care about, okay, you had 90 people 12/31/24, and you need to have 100 on 12/31/25. We don't care about all the 365 days in between, basically.
Yep. All right, one more here. For 2025, just again, what is the minimum company size for eligibility
10 FTEs.
as of December 31st, 2024?
Yes, yes.
So if you're not currently at 10 FTEs, you can't hire up to become eligible for this to then apply.
Right.
You
We
have to have
passed that.
already done
Yep.
it. But come back for next year, please. Oh, coming in. Are there any restrictions on the kinds of roles hired? I love this question. No.
Nope. I mean, we have seen them all. So as long as you're a life sciences company and meets one of those criteria I had earlier in the slide deck, we've seen it all. I mean, we've seen manufacturing, we've seen R&D, we've seen administrative, we've seen sales. I mean, you can probably add a couple I missed, Gene, but it's any position, no restrictions.
We do ask you about it, mostly for our own data collection purposes and just to understand what kinds of jobs we're incentivizing. It may also, because as Peter pointed out, we're giving a premium for manufacturing, expanding manufacturing capacity. It may behoove you, if you have manufacturing roles, to please specify that. In our compliance, the only thing we're looking at is headcount. We are not actually tracking the specific number of each role or whether you retained even that specific role. You could hire an entire team of R&D scientists in year one, get rid of all of them, and then hire a whole full team, the same number of manufacturing associates. And that would technically still have you in compliance because your net headcount would be consistent. So we don't really want to see that kind of volatility and not that way of gaming the program, but essentially, no, there's no restriction on the kinds of role hired. We ask, please tell us, because we're curious and interested and it may benefit you. But the retention and the compliance does not have anything to do with the actual kind of role. Is the $16,000 award an example, or is that the actual award per FTE?
Oh, good question.
Yeah.
Um,
It's a historic
an
example.
It's an example based on historical data, but it has changed year over year. It depends. Again, it depends on some of the premium awards I talked about. If we have hypothetically 2/3 of the applications or the awards are in gateway cities and we offer a premium, that will skew that number higher or lower. I mean, I'm not being totally clear here, and that's on purpose. It basically depends on what we receive in terms of applications. I think it's fair to say it will probably be a minimum. I mean,
Yeah.
it hasn't been lower than 15, 16,000 for a while, so I think that's a safe minimum. But again, it depends on the type of applications we receive.
Yep. So it's definitely the right ballpark. It would only, yeah. And as Peter said, it would only go up from there potentially by a few thousand, depending on what else you're doing. But yeah. We have currently reached the end of the questions. Any more anyone wants to throw in the Q&A? I'll give folks just another minute or two. I think we have another 5 minutes at least. Oh, there we go.
I'll do one last.
Okay, there is one more in here. Go ahead, though. We have time for this, though, anyway. Go ahead.
Okay. I just want to say this. I've been here a little over 3 years at the center now. This is a great program. I mean, if your company is growing, the state will pay you to grow, basically, as long as it's in life sciences and a few criteria. But when you think about it, you add 10 heads, $150,000, $200,000 for that, whatever the math works out to be. And all you have to do is basically fill out an application and submit it and then maintain that head count. So it's not a heavy lift for you folks. I don't think. I don't want to say it's easy money, but I just think it's a great benefit that the state is offering. And as Gene said earlier, we want to see you take advantage of this and get this money and help your company. So we're very supportive.
It's certainly designed to benefit. If you're a company that's eligible and you're fitting within these target priority areas that we're trying to support, we do not want the mere administrative burden of applying for a program to be anything that stops you. So we have gone out of our way to make this as simple and straightforward as possible. If along the way you have questions, please don't hesitate to reach out. We offer help all along the way, clarifying questions, anything you might need, especially if you're a new applicant. So if you're new to this program, please do reach out. Again, you'll get the slides that has the email address of who to reach out to. You're welcome to reach out to me and Peter directly as well, though. All right, this additional question here on the award letter, it will state the amount award ? So I think people are wondering when, if it's so wishy-washy about how much you get per job, when do you know how much you're getting?
So after we have the board meeting, May 1st, we will send out, we will contact you and tell you the next day, and basically say, congratulations, you have been approved for 20 new heads at $18,000 per head, so 360,000, whatever the math is there, we will tell you on May 1st. And then we'll have a formal agreement. Allison and her team will get involved, and we will send, it's only a couple pages, agreements to the awardees saying, here's what you committed to, and here are the, compliance and whatnot. So we do formalize this once the board approves the awardees.
Yeah. You're not left guessing when you're filing your tax return about how much you're getting. Another question. We are in Cambridge. Does that mean that our hire head count is 10 versus 5?
Yes. Well, all right,
Yes,
go ahead,
but.
Jean.
Yeah, yes, but. There was that slide. I'm trying to bring it up now because I don't remember the specifics because it's new.
Say the question, repeat the question.
Oh, they're in Cambridge. Does that mean they have to hire 10 new employees instead of 5? And the answer is not explicitly yes, because they could be a small company. If you have less than 50 FTEs, then
Yes,
you can hire 5. But because you are not located in a gateway municipality and you are not located in the target counties, you have to have less than 50 FTEs in order to only hire 5 instead of 10.
Yes.
Correct me if
To
I'm wrong.
answer the question, if that the person who asked has less than 50 FTEs, it's a minimum of 5.
Even if you're in Cambridge.
Even if you're in Cambridge. If you have more than 50 FTEs at your company, then you need to hire 10.
Unless you're in a gateway municipality or outside of those counties. So yes, for the specific one. All right.
Yeah, I think this is all in the slide deck.
Yeah.
Send that out, and please take a look at that again. I know I may have spoken quickly over some of these, and again, happy to answer any questions folks have.
These have been very fun and thorough questions, I think. I don't see any more coming in yet. Again, I'll give it another minute just in case someone wants to jump in. But anything else, Peter, coming to mind that we're forgetting,
No,
or
just
the questions
again,
made you think of?
Jean is our Chief Business Development, Chief Business Officer. So any other programs here at the center, you would want to contact her. But if it's a specific question about the tax incentive program, please send an email to that mailbox, and either Kira or myself will get back to you.
Yep. All right. I don't see any other questions coming in right now. So just thank you all for your attention, and thank you all for the business and the collaboration and everything you provide and contribute to the Massachusetts life sciences ecosystem here that we are so proud to serve. So this has been really fun. Again, always here to be helpful and answer questions whenever we can. I'll turn it back over to Nicole for any wrap up.
Thank you,
Wait,
Nicole.
I saw one more question pop in at the last second while I still have the mic. If you don't meet the FTE goal, the adjustment of the award is in the following tax period, ? Yeah.
Yes.
Great. Okay, cool. All right. I think that's it. If there's any others that we don't make, or you didn't make it in the chat, or you just didn't feel comfortable, whatever, reach out to that.
And you know what, one last add on to that, a question we've received from a few people. If a company is decertified, if they fall short, we don't put this in the paper. It doesn't get publicized. I know a few companies have been concerned about that, saying, will this look bad for my company if we fall into this? No, we don't do that. So that's, again, we encourage you to give it your best shot, and hopefully it works out and you get some good tax incentives.
Okay, that's really it. Thank you so much. Thanks, Nicole.
Yep. Thanks, Nicole.
Oh, our pleasure. Thank you guys so much for taking the time to share your expertise. And thank you for all of you who joined us live. We really appreciate you coming on and finding out about these great programs that Mass Life Sciences offers all year long. As Peter and Jean said, please follow up with them if you have any additional questions. The email is going to be in the slides, and you can always go to their website. We encourage you to come to any of MassMedic's programs. You can find out what is coming up next at massmedic.com/events, and we'll see you next time. Have a great day.